Today, I am presenting on something that is important to all of us in real estate. Welcome to Banking on the Smart Flow. It's an introduction to one concept in infinite banking to help you save money and consolidate debt. So just one concept, and we're going to really dumb it down today. No one wants to be ruled over nor be a slave to someone else. I love this proverb, famous proverb that we can all live by. And just a little disclaimer so that you know, I'm not giving you tax, legal, or financial advice. These are general concepts from something called infinite banking, and it's basically my personal perspective. Anyone who wants to own real estate, currently owns real estate, or who wants to develop new knowledge about what I call the smart flow of money, listen in. It's a way of living out from under debtors. It's about establishing a new way to spend money and monitor its flow. I'll use the next 10 minutes to show the smart flow method, why it's important to know for new home purchases and now in the future, and what it means for all your purchasing power. And the idea is to learn how to cash flow for less and purchase smarter. You're a person. You possess the key to financial freedom. You're the valuable key to monetary success and freedom. I'm a freedom fighter, always fighting for freedom, and I'll explain why. I'll touch on only these three topics: the definition, how to use it for real estate and personal use. So lean on your tax advisors, your financial advisors for specific help to your situation. Smart flow is something I made up. It's a Kateism. I tend to make things up in my mind. I'm a thinker and think outside the box. And so when you may agree with what I have to say here, you may not, but this is something to pay attention to. So I'm using this system and it works for me and it works for thousands of other people just like you. The rich and famous use it, and I'll show you why. So traditionally in this image, you are on the outside of your finances, disjointed and allowing others to use your money. What do I mean by using your money? Well, who has a checking account? Okay. Average balance, let's say, $5,000 or something like that. And that must feel really good to have money just sitting there and knowing it's waiting for you. Well, guess who's using that money while it's sitting there? Your institutions. They take it out into the marketplace and make money on your money. So figure out a way to make money on your own money, and I'll show you how. But you don't want to leave it under a mattress. You need to have it in an account of some kind, but what? Are you ready to hear about the 3 C's? I'm going to show you my 3-step process to the smartest way to spend, save money, and borrow money. Step 1, C number 1, consolidate. Concentrate all the eggs into one basket. How? With something called a HELOC. Well, it's a home equity line of credit. That's what it stands for. It's a big distinction between a home equity loan. So we're talking about home equity line of credit. And it puts you inside your finances and gives you control. Any income or bonuses, put it into the HELOC. Any bills, home payments, write a check, or use the debit card that's in your HELOC account. Let your money work for you instead of allowing your money to be used by institutions to make them money, like I was saying. Step 1, open the HELOC and move the flow of your money that comes to you and that goes out as paying bills from the HELOC. Oh, sounds scary, right? Cancel all the credit cards, get rid of all the different checking accounts and savings accounts and money market accounts. It all goes into one pot, all comes out of one pot. So pretty much goes against everything we've been taught, right? In practice, here's how it works. Here's some general terms for the line of credit and what you could kind of expect. So you're looking at a 10-year draw. The idea behind this flow of money, the smart flow, is that you actually get rid of debt within 7 to 10 years. So That's great. But if you go past the 10-year draw, you've got 20 years to take your time to pay it off. Usually they'll give you a limit up to 90% of a home value, and it's interest locked for the first 5 years. Some banks will loan up to $500,000. And believe it or not, it costs $250 only to open one of these. Now, I've been selling real estate for 29 years. Never in a traditional mortgage have I ever seen the line items on a closing settlement for buyers where they're not paying at least 2% of the purchase price towards closing costs and origination fees and all that. $250, that's nothing. So in closing is quick. And in this instance, I'm just going to show you interest only. Tu parles français? Je parle français un petit peu. And so what does vivre la différence mean? It means live the difference. It's an expression of approval of differences, especially that between the sexes. Okay, so for this instance, let's just call traditional mortgage the masculine, the heavy, and we'll call the HELOC la femme, the feminine. And so let's see how they duke it out here. In this example, this very raw example, we're looking at interest-only payments. Okay, so with the traditional, we have a closed-ended loan. Yeah, you apply once, you pay for 30 years, and then you own the title. With the tradition, or with the HELOC, it's open-ended. That means you can use it again and again. So you apply once, pay off the loan early, use it again, own the title, use it again, own the title, and repeat for personal use or to buy multiple properties. So the HELOC is like a credit card, and you apply now, use when needed. If you don't have a HELOC, if you own a home and you do not have a HELOC, please do yourself a favor and get one. You never know when you're going to need a pile of cash, whether it be for a health situation, or maybe you want to make a donation to a nonprofit or make a difference with your money. Don't let it just sit there in your equity of your home. You pay interest only on the average daily balance with a HELOC. But by pouring all your expenses and income into the one account, the HELOC, you can close all the others and experience the power of the cash flow, the smart flow. So you have here same monthly income, same monthly expenses. And the secret to paying off the mortgage in 7 to 10 years, you can see, is the HELOC. Mortgage, you got 30 years to do it. But with a HELOC, you get 66% savings over time in interest and time, 66% savings of time. So in this simple example, assume the line called amount finance, so that $422,000 does not get added to. So in other words, hands off. You cannot create more of a debt for yourself. So in this instance, you just start at 422 and you leave it there. And so as you can see, a monthly loan payment, the difference between the 2295 and the 929, that's $1,366 savings per month. What do you do with that amount? You apply it to that 422. So you're never adding to it, you're taking away from it by paying it down with that difference. And guess what? It cuts the years to 7.5 years payment versus 30. But what's shocking is, look at that interest that you have saved. $260,000 over the course of a 30-year loan. Who's making the money on you there? The lender. Step 2 to Kate's smart flow of money is to conserve. See, conserve. Here's how it looks over time when you compare a traditional mortgage with the HELOC. So we've got 65-month payout here on a $200,000 loan. Again, these are really average numbers. We're not talking about higher interest rates, etc. But just because your payment is now a fraction of what it was, be smart like a fox and be diligent to keep expenses down until the HELOC is zero balance. Remember, this is a strategy to getting wealthy and accumulating the things that you want in life. The HELOC is your friend if you trust the system. Every dollar you earn, every bonus you make, every little check you get from grandma for Valentine's Day, it goes into buying down that 422,000, or in this case, the 200,000. Love my HELOC because it offers me unlimited debit card use. So it comes right out of the account, and check usage. So I get checks. So it works like a checking account. And in this, if this interests you, of course you should. Wait, I don't mean to should on you. Go get a HELOC, go to different banking institutions, shop around for yourself, learn about which ones would work best for you. There's first lien HELOCs, second lien HELOCs, and find the one that works for you with the best interest rate and whatnot. Are you ready for the third C? What is it? Capitalize. Ooh, good word. So the cash flow strategies for your future, for your legacy, all rely in this flow process. So once you've paid off your HELOC, call me and I'll help you purchase another property. If you haven't read The Psychology of Money or The Power of Zero, go ahead and get those books. They map out the power of infinite banking in general. This is just, again, one step to it using a HELOC. But teach your children, teach your grandchildren, and those who don't understand the power of Aunt Kate's Smart Flow. Again, let's talk about the HELOC as being a line of credit similar to a credit card. You apply for it and you use it as you need it. So it could just sit there and you never draw out of it at all with a zero balance. But just like with a credit card, if you start putting things in, paying for things through the HELOC, then you'll have a balance, and once a month you'll pay the interest on that balance. When I say capitalize on it, use the power of the HELOC for small purchases such as cars, a major health event, if you want to do some landscaping around your house or remodel your house, great opportunity to use the money out of a HELOC. Don't get a car loan from a credit union or anything like that. Just use the HELOC, because guess what? The interest that you pay on the HELOC is a write-off, whereas the interest on a credit card or a car loan or anything like that is not something that you can write off. So that's another key component to having the HELOC. In closing, you are the key. Leverage God's greatest gift to you, you. Be in control of your flow of money instead of it being in control of you. Use HELOC for existing and future real estate purchases, and Kate Paulin, your agent with heart, to help you make the purchase happen, but also use it for personal expenses. And remember, it's as easy as the 3 C's. Consolidate all the money into one flow with the HELOC, conserve your hard-earned money, and capitalize on yourself. Be smart, because I know you are. And that's all I got for you today. We had some good questions and answers in our live presentation. So I just thank everybody for coming to listen to Aunt Kate's Smart Flow of Money. Hopefully this will help you. And I'd love to hear from you right back. And coming from you live here in Boulder, Colorado, I'm Kate Paulin, your agent with heart.